Hi, welcome to Give Permission to Ask Questions. We have Kevin on our show today, and he is an insurance guy. So today it really is give permission to be okay with talking about money. So Pan, you do everything. You're responsible for this show. I'm just going to be quiet.
Perfect. Thank you so much, Laurette, and welcome, Kevin. I'm really excited to have Kevin as our guest today. He's the insurance expert. He's with Desjardins, if I said it right.
Yes, you did.
Perfect. So what we're going to talk about today is how to be able to generate cash flow. That's one of the components of a financial plan that we discuss with our clients, to be able to generate cash flow with your hard-earned money, which means to be smart with your money and keep as much of your money with you. Be able to generate as much of your money so that it goes towards those goals. And those goals could be your short-term, medium-term, long-term. Short-term is less than a year, medium-term 3 to 5 years, and long-term is 5+ years. So retirement, we all want to retire as soon as we can. So working towards those goals, one, we have talked it previously that your goals have to be SMART goals. So they have to be specific, measurable, attainable. You have to have a timeline, a strategy, an execution plan, an actionable plan towards those, right? It's like your GPS. You got to have the exact coordinates and the exact directions. And also on the way, the ability to reroute if there were any mishaps or if there were any detours on the way. Now, talking about again goals, in order to reach those goals, each of these, so buying a vehicle, buying a house, education for your kids, they require money. So you are working hard, you're bringing that paycheck. Now, what we got to do is to be very smart with the paycheck. So again, one of the components of a financial plan is risk management, to mitigate your risk, to get the best bang for your buck. And that's where Kevin kind of.
Well, like Kevin, you're here. You can talk too. You just need to you can just interrupt if you want to. When you guys say risk management, can you make that really? What does that mean? Do you know what I mean? Like, what does risk mean? What does management mean? Like, let's just simplify for the grade 4s in us that don't know and don't speak money. I want the definition of risk management.
I would say risk management, but to bring it down a couple levels, and that's a very formal term for it. Right. I would say is doing things so that you don't get hurt or you don't have to pay more money than you should. Okay. Something that's a very simple thing to do is when snow comes, a risk management thing to do would be to go and shovel your walk because you don't want somebody to slip and fall on it, or you don't want to slip and fall on it.
Okay, but like risk management with money too, is that like just talking to the banker or talking to you as well? Like, because you guys have different options, right?
Yes, yeah, so another form of like risk management, if you will, if a person decided to purchase life insurance, that would be a way of, say, preventing, okay, if I'm working, and I have children and a spouse, if I'm gone, I want to make sure that they don't have to worry about money now for a while. So what's a way of spreading that or getting rid of that risk? And purchasing life insurance is one way to do that. Another really good form would be like, say, disability insurance. So if I am out there shoveling that walk and I slip and break my hip, now I can't work. Oh no, what do I do? If I have some sort of type of insurance that's going to pay me money while I'm hurt and while I cannot work, that's a way of pushing that risk to a different company.
Kevin, do you guys do disability insurance?
Yes, we do, actually.
You're like, do
I? Yeah, I had to think about it for a second, and yes, we do.
And then, Ken, do you guys do risk insurance?
Yes.
Okay, so both of you do it. It's like,
yeah, so it's
kind of
life
like shopping, but for being smart about it, right? It's the whole pyramid of like,
It's
maybe
really,
you need this, you don't need this kind of deal.
it's really looking into the future to find out if something was to go wrong, what is the financial impact of that tragedy.
Mm-hmm.
And now, so these tragedies could be death, it could be disability, it could be critical illness. And as we age, long-term care, it's one of the biggest burdens on the aging senior population, because it costs a lot when you're older to take care of your health, all the medical bills and everything, right? So it's being able to foresee into the future that, okay, this is what it's going to cost me. Let's prepare for it today. There are two ways of doing it. You can finance it yourself. Let's start saving money and fill in this gap. Or you can get an insurance policy, which what that insurance policy does is it spreads your risk over so many people.
Mm-hmm.
That's called mitigating. It's spreading it over so many different.
Oh, yes, having different. Okay.
Right? That's where you're paying that monthly premium to get a certain benefit at the end.
So, like, a good plan makes you prepare for the worst. That's
For the
what
worst.
you're saying right now.
Yeah.
I love
And
how. Go ahead.
and while we're talking about that, like we said, if we come back to that cash flow, preparing for the worst, everything requires cash flow. Your cushion means what? To have that stack of money available for all those unfortunate circumstances or for those opportunities that are going to arise. You need money for that, right? So cash flow management helps you generate extra little bit of that cash. It's called being smart with your money. And that's where I remember my conversation with Kevin just about a week ago. We were in a meeting, and he talked about few different ways of generating cash flow, where with the same amount of premium, you can either get a better coverage or you can get same coverage with lesser premium. That's how we generate cash flow, so that you can then deploy that extra little bit of money somewhere else towards some other goals. And I found it really, especially during this time, during COVID, when people might be tight with money, or they're foreseeing that, okay, well, if we were to ever go through this again, we need to be better prepared for it. You need more cash.
Mm-hmm.
So you need better cash flow management, right? So that was a big need that was uncovered. So I really wanted Kevin to kind of go over what different changes is he seeing in the insurance industry,
Yeah.
or with Desjardins, right?
Yes. Yeah. Sure. Well, in the last, I'd say 2 years, the insurance industry has gotten more expensive for everyone for car and house insurance. I know we saw our insurance rates go up by probably 20% in our household. See, I don't get a discount on it either. I got to pay the exact same rates. What am I doing?
You're mitigating risk, right? Is that?
That's right. Although what I've learned, and something that is quite important for people to consider, is when we come into the like cash flow type situation, lots of things are done in monthly payments. And something that's important to check with your insurance company or broker, whoever that may be, are you being charged a finance charge to take those monthly payments? So it might be 2%, 3%, 4%, 5%, I've even seen as well. With Desjardins, to toot our own horn, we don't charge anything. So if you're paying $1,200 a year for your car insurance, which I'd love to be paying right now, then you divide that by 12, you're paying $100 a month, that's it. Versus if you go to another company, they may charge you that finance fee. And if it's 3%, well, you're looking at quite a few dollars more versus just paying the flat, what it is, $1,200 a year and being done with it. So insurance companies will charge a little bit more for that, and that's something that's important. Is that worth it for you? Can you afford to pay it all in one lump sum? Or is it better to just take the hit, so to speak, and pay it monthly and away you go?
Which is usually better, monthly or that one hit? Or it just depends?
It depends. No, it does depend. Because I would say, like, for a person who isn't doing a lot of changes in a year, maybe changes their policy once a year, or just has one vehicle, keeps it going year by year, then you're better off to pay it once a year. But if you're like me, where you have a couple different vehicles and sometimes you're driving this one and sometimes you're not, you're switching back and forth, then you're way better off to pay the monthly, because the monthly payments adjust throughout the year based on what your insurance is doing. Whereas if it's just one payment, you're not changing anything in the year. So save that percentage points and keep it there.
Yeah, because I just pay once a year and I'm like, and now I don't have to think about it.
Yeah, exactly. Yep, perfect.
I just hate like, oh no, I have this, and I just want to like pay the whole thing and then forget about it. Do you know what I mean? But I don't know if I'm that type of person, so that's why. I just find like once you say cash flow, do you guys like get right away where people are like, I don't have cash flow? Do you know what I mean? Is it like normal to be like, what are you talking about? Cash flow? What are you talking about? Like, I think it might just be a me thing too. So like how important is it to understand like your cash flow exists and where you're putting your money? Because like $5 in Tim Hortons every day, that's what I was talking about earlier with Pan. What was it, $30 a day? Or it was like $27 a day every day over a year is like $10,000 that you could like get, right? So I think it's just important to have conversations about money. Like I suck at having conversations with money. That's why you guys are here. That's why Pan is my co-host, to be honest with you. So
and actually, cash flow is the foundation of a good financial plan for anyone. You got to understand cash flow is the ABC of money. If you understand your cash flow, you know that, okay, well, this is my paycheck per month, I'm getting this much, and this is how much I'm spending. And if you really want to know your cash flow, look at your statements, bank statements. Look at last 3 months and understand the trend. That's where it's much easier for us to help our clients understand, because we can punch in the numbers in our softwares and kind of help them understand their own financial behavior. But it's actually not that hard. It's very simple. Look at your bank statements. You'll know what your cash flow is like.
I will say one thing that both my wife and I do, and we do it once a year, although we were bad this last year that it took us a year and a half, was we will sit down and we'll do like what Pan suggests. We take our credit card statements and we take our bank statements so that we have exact numbers for what they are. I look at 3 months and I average it. Okay, groceries, we're averaging $600 a month. Gas, we're averaging $200. Well, COVID, $25 a month. Whatever else, we average out all those expenses. Then we go, okay, this is what my income's at. This is what your income's at. We take the after-tax income. We don't do the before tax. And then we look at all this stuff and say, okay, to just meet our expenses, this is what we need to make each month. So if we're making more than that, fantastic. If we're not, we got to figure something out on whether we start to cut back, or I kick the 5-year-old kid outside to go get a job to help pay for stuff. Then we got to do what we got to do. So, yeah. But that helps us because it gives us a good, okay, this is where we're at now. And we can even look back last year, the year before, 2 years ago, and we can say, well, here's where we were before. Here's where we're at now. A couple things have gone up. Is there a reason for that? Or this stuff has gone down. Okay, that's good. There's, what's the reason for that, and what have you. And then that way it makes that conversation about money a little bit easier each time that we have it.
So Kevin,
really about own financial habits. Know and understand what's your relationship with your paycheck.
Yeah,
it's so personal. Like money is one of those intimate things that you don't tell anyone.
You gotta let your trusted advisor in on it, though.
I know, right? Who do you trust? Who can you trust?
Yeah.
I was just gonna say, Kevin, share your 30-second elevator pitch with us. Like, sell your services. Do it shamelessly. Do you know what I mean? Like, this is why you're here.
Sure. So, with our office at Desjardins, the office that I am with is at Edmonton, mm-hmm. and we specialize on service of our clients. Mm-hmm. So when you call us, you're going to get a phone call back. The rates are made by the company. We can't control a lot of that. But if you would like to deal with a company that is going to answer the phone, going to return your email, and going to return your phone call with a voicemail, not press 1 to talk to Timbuktu.
Right.
This is we are the place that you want to work with. Yeah.
Do you have like, how do you like people to get a hold of you? Like email, call, LinkedIn?
Email and phone, yeah,
Okay.
is easiest. I actually work from home. I'm in our basement. Yeah,
So
yeah.
do I.
It works out really well. As long as I'm connected to the internet, I'm good.
Exactly.
Yeah.
Do you want to share it in the chat, and then when I post it
Sure.
on LinkedIn, I'll just like pop it up there or whatever? Like,
Sure.
are you okay with having your information
Yeah.
on YouTube? Just to make
Yeah,
sure.
no, 100%. Yes, yeah, I have no problem with that.
Right? Because then
And
it'll be helpful for you to get more clients. I'm all about like helping people. I wanted to talk about residual income. So like, like, is that a thing? Does that actually exist? Like, do you guys encourage that, or do you know what I mean? Like, or like, do you guys encourage people to have more than one stream of income? Is that like a smart idea, I guess? Just spitballing.
Yes.
Kevin, do you have one or more than one stream of income?
Um,
Refuse the question if you want.
yeah, no, I absolutely answer it. I'm actually pretty open with money stuff. I have no issue talking about it.
Okay.
I will say, do we more than one stream of income?
Why did you freeze, Kevin?
I had to think.
Because I'm
That's
thinking.
why. That was just me pausing. Yeah.
All right.
Um,
I don't know how to fix this problem, so.
Yeah, I have an interesting situation because on my end, like I'm salaried with there's some commission that's also
Right.
I can work there as well.
I
My
love
wife,
commission.
so do I. My wife is a lawyer, but she works from home as well. She runs her own practice, so she's
Nice.
self-employed,
Okay.
and that has a whole different basket case of fun that comes with that. When I look at our savings that we have, like RRSP and I have a tax-free, inside those investments, we have put it into, we put it into investments that will pay us not just a little bit of capital gains, but also a little bit of dividends as well. And the dividends is what builds our money and keeps it going. It was so great to see Crystal this year, her RRSP, she thought it was at like 11,000. I said, no, you're up at like 14,000. What are you doing? Got the statement. Yeah, got the statement. She was at 16,000. She's like, oh, what's this? I'm like, yeah, exactly. Isn't that great? That's what compounding will do, because you start earning dividends, which are then reinvested back into it. And it just starts building and building and building and building, and away you go. So absolutely, you need to have more than one source of income.
I just love that, because people don't, they're like, well, I don't know what residual income is, or like, you know what I mean? And I'm like, but it's a thing. Like, I'm working on it. I don't have it yet.
make your money work for you while you're sleeping.
Mm-hmm.
Yes.
I totally agree with that.
Yes. Right. And it never hurts to have more income. So yes, residual income, of course. Just make sure that you're smart with that money. And the way you talked about compounding, compounding is very important in building your cash flow, because you're earning those dividends, they're getting reinvested. Capital gains, they're getting reinvested. Compounding is very powerful, but it could be positive compounding if you stay on track, if you keep up with the strategies that you've built in, or it could work negatively too. So like you said, in financing, if you have a financing option where you're paying for that financing, monthly financing, the 3% that you're annually paying over your lifetime, that's negative compounding. That's money going out. If you had paid it all ahead in advance, you could have saved that much. So you have to be very careful. Compounding is both positive or negative, so use it to your advantage. That's an amazing point that you raised, Kevin.
My brain shut off. It got too, like, just get out. Sorry, guys. I was like, yeah, money. Yeah. Not the only one, but I'm like, I want to learn, and I love talking and learning about money. Pen, you have any more questions for Kevin?
Kevin, I remember you were you were talking about the driving history and the the credit score also kind of helps get better premiums. Could you shed light on it a little bit, maybe?
Yeah, of course. So I'm not sure if many people are aware of this, but most insurance companies in Alberta use soft credit scoring to help determine rate. When it comes to auto insurance, it's illegal for an insurance company to charge extra because of credit. So when it comes to doing a soft check on your auto, it's always worth it to try because it can only cause your rate to go down. So that's a good thing there. House insurance is a little different. House insurance, a credit check can cause your house insurance rate to be a little bit higher. So that one, maybe I would want to know roughly what my credit score is first going into it before saying yes or no to it. And that's just on the house insurance side of things. But vehicle insurance, every day of the week, it's worth it to say, yes, let's do the credit score there.
All right, perfect. And there you go. That's another strategy to generate a bit of cash flow, get a better deal for the same premium or lesser premium for the same policy. So that's amazing. Those are the questions that I have. Anything else you want to share, Kevin, or any other questions, Laurette, that you have?
I think I quickly wanted to go to Kevin's website. So I'm just going to share my screen really quickly. Boop. See what's on the internet. And just be like, hey, this is Kevin's stuff. Well, not found. Oops.
What?
It could be a me thing, by the way. Okay, let's try now. Yeah, okay, this is correct. Okay, so this is what it looks like. If you call this person, is this not you though? This is not you.
Stephen Bosch. No, Stephen Bosch is the owner of the agency. Okay. I work for Steve. That's how that works. Okay,
so is your phone number in the thing though, at least?
That number there, the 444-7544, that's our office number, if you will. So that's probably the easiest way to get a hold of me. I have no problem putting my cell number up as well.
Well, I'm just gonna be like, talk to Kevin Bartel, and I'll leave your name and then you know what I mean. So like, go to that website. Kevin's your guy. Blah blah blah. So I'm happy with that. I always kind of leave with like questions, comments, concerns. Both of you, you're good.
No, I think it's good. This was fun. Thank you.
This was a good episode. We did well. So thank you for coming on. Give permission to ask questions. Today was about insurance. I learned a lot. You learned a lot. So yeah, we always encourage people leave comments in the comments of YouTube. And yeah, thank you so much for being on. Everyone have a good day.